Welcome back to my channel, my fellow traders. Today I have this very lovely, very simple strategy for you guys. It's a 5 minute, should I say scalping? Well, you can say it's a scalping strategy. My recommendation is 5 minutes chart, and we're going to make use of just one particular indicator, the moving average indicator. So let's dive in and see. So first, let's bring in our indicator, the moving average. This is the settings: 50 as period, 50 shift 0, linear weight, apply to close. This is my recommended setting. So what you're going to do is you wait for a pullback. Remember, we are on the 5 minutes chart. You wait for a pullback. There's a certain way I select my pullbacks. I have a video about it. Please try to watch that video. So this particular pullback meets the criteria of my own special type of pullbacks. So once I have this pullback, I'll wait for price to break above moving average. Remember, this is a 50 moving average. 50 moving average. Wait for price to break above it and do its thing. Once I have a higher high close above the moving average, then I'll wait again for price to come back under the moving average. Once price comes back under the moving average, then I dive down into a lower time frame and look for an entry towards the buy side. Remember, this is the pullback, so I'm expecting price to go from this. Price has gone in, price went in and came back like this. So this is what I'm saying. This is the pullback. This is the expansion. Pullback. Then price did this. That is, price went above the moving average. Price has to go above the moving average and come back. So when the price comes back, that is, once you have price coming back, that is when you now start preparing for price, like possible areas price can come to. I have a strategy for that too. Possible areas your price can come to. So like possible areas like this, yes, like that. Okay, this is the major place price. According to this, I have a video on this too, how to select possible areas that your price, as your pullback, possible areas price will pull back to before So if I push this to the front, that is, I'll let price do this. Please try and understand what I'm saying. I'll let price do this movement. Then this movement, it is here I'm interested in. What happens here? So once price comes to what I'm saying, the thing is, it is not that price will come into this box and do the thing. It is just an area where you feel price is supposed to decide if price wants to go up or down. So for here, once price gets here, I dive down. So let's put a mark there. So we have a mark there. So once price comes here, we dive down into, remember we're on the 5 minutes chart, so we go to our 1 minute chart. So this is where we marked. So here is where we'll make our decision if we want to buy or we want to just sit down on our hands and wait for another opportunity. So when you get to this place, this is when you now make use of one of the lower time frame entry confirmation strategies that you either have in your arsenal or maybe one of the ones I've taught you in the previous videos. So let's just adopt one of those strategies and see how well it will fare. So for this one, let me just bring in one of my favorites, what's it called? The zigzag indicator. just bring in the zigzag indicator default setting. No, you don't have to change anything there. So you can see. So for this strategy, according to what I taught people, then you look for a high. Once price gets to your zone, you look for a break of a high. This is a high. It wasn't broken by this high. This was broken. This strategy for the lower time frame, we look for a break of the lower high. Since we are trying to buy, if it is we are trying to sell, we look for the break of a higher low. So for this we're trying to buy, we look for a break of the lower high. So there's a break here. It's not just a break, a higher high must form. There's a break and a higher high formed here. But unfortunately for us, or for us rather, price closed below again. So that turned out to be a bad trade. Let's move this aside. So price broke below it. That's one of the conditions of the lower time frame entry strategy. Once price breaks above, price is supposed to pull back to one of the spots and move, but price failed to go. Nothing, no big deal. We're on the lower time frame, so maybe you just lost maybe $3-4 here. It happens in forex. You can't stay without losses. But the thing is, as long as your strategy is good and you take another entry and you are in the pips. So this didn't go in our favor. Then we look for the break of another lower high, and this is another lower high. And what happened here? Price broke it. Remember, we are still in that zone. Price broke this one. And what we normally do with this strategy is, once price breaks the lower high, the opposing candle before that breakout is your box. That is your trigger box. That's where you pull your trigger. So let's just mark it. Extend it to the future. So in the meantime, let's just pretend as if price just got here. Price hasn't come here yet. While you were doing, you plotted your lower high, price broke it, you drew in your box, and look at what happened. Price came back to that same box and did what? Price bought and went up. Let me change the color of this box so we don't mix it up. Please, if you don't understand this video, please watch again and again. This is a very, very simple strategy. Very simple strategy. Save. So let's thicken this up a bit. Okay. So let's go back to our 5 minutes chart. Remember, everything started from a 5 minutes chart. So let's remove you only need the zigzag indicator or any other indicator you use to confirm your lower time frame entries when you want to confirm it. Once you are done with that confirmation, you remove your zigzag indicator or you hide it so it doesn't confuse, makes your chart neat enough. So remember, this is our pullback. We applied the 50 moving average and we allowed price. The condition is, once you have a pullback, allow price to buy. That is, you need a higher high here and price will now pull back. Once price pulls back, it's pulling back to your box. That is or if you don't even have a box, maybe you just have you can just create an area you feel this area should be good enough. But what matters most is monitor this leg. It is this leg. Let me remove this. We don't need this. We don't need this. It is this leg we are concerned about. You have a pullback. Price came out here. Price may come here and do this. It's not necessary price will go up. Price can even can go up further than this height, the beginning of your pullback, and still come back and do this. So what matters is just you need a breakout, a break-in, and a movement. So from here now, look at what price did. This is our 1 minute time frame, lower time frame entry. Look at what price did. Look at it. This is not crazy. Let's go for another example. Example number 2. So look at this. This also is a pullback according to my own pullback conditions. So we still have the 50 moving average on the chart. So like I said, you need price to go above this moving average and make a higher high. Price moved above, price closed above, but it didn't create a higher high. So you are not bothered about this section. It is this section. Price moved above, created a higher high. And what did I say you do? You wait for price to come back in here. And once price comes back into this place, let me adjust this. This is too thick. So the thing is, the first condition is price must break out above here and create a higher high. Then you wait for price to come back here. Like according to one of my strategies, one of the things I've taught on my page here, on my channel, this is where I expect price to come back to. There's a video for that, how to identify zones price would come back to. But since it is forex, most times I'll just from that zone to the end of, from the zone I expect price to come back to the end of that move. So once price comes into this place, you go down to your lower time frame for lower time frame entry confirmations and take your trade. Mind you, I like putting this on my pullbacks because it makes me easily spot them when I'm doing my checking out what happened later on my charts. So look at this, assuming maybe as at the time you were plotting this, you waited for this price was here, you marked your box. Look at it. Once price just come here, lower time frame confirmation, and look at the price. This is a very simple strategy. Let's check another example. So this is another example. Price broke. This is a sell. What we've checked before was a buy model. This is the sell model. So price broke below here, but there was no lower low, so price still went ahead. So price broke below here and created a lower low. Like I said, wait for price to come back. So like my strategy, I expect price to come into either this place or this place. That's the video for that. Please try and watch it. Expect price to come into either of these two sections. So once I have price here, I dive on, that is, you are supposed to wait for a lower low under, since you are trying to sell under the moving average, and wait for price to come back to one of your boxes that you expect price to come to. There could have been another box here too. Let's double this and make use of this. You see, these are areas price could have come to. So the thing is just at times I can easily tell you to maybe adopt another thing too, though it's not necessary because it depends on what happens at the end. But you can easily do something to, like maybe use a Fibonacci retracement tool, so that at least to an extent it guides your decision. So any trade you are going to consider trades above 50%, or maybe just target any trade, anything above 50%, anything above equilibrium. That is, all this between 50% and 100. These are good areas to enter your trade. So you can adopt that method too. So once you wait for price to come back, let's remove this. Once you have a lower low, wait for price to come back into this place. Once you have price in this place above maybe the 50%, dive down to your lower time frames and enter your trades. Seek lower time frame entry confirmations and enter your trades, and look at what happened at the end of the day. Look at it. This is a sell. Let's go into another example. For this particular one, let me zoom in. I like this example because at times it doesn't look like what you would expect, but funny enough, this meets the criteria of a pullback for me, and it came outside here. The thing is, any pullback you are going to consider, please make sure there's a higher high above this moving average. That is what makes it that is what confirms it as a pullback. After consideration of a pullback from my own strategy, let me remove this first. Certain things has to happen here for me to consider this a pullback. I have the video, please watch it. So it meets that condition. Then another condition is there has to be a higher high close above this moving average. For that one, it is considered a pullback. So now our normal regular condition, we expect price to come down below. A pullback is like this. Now we expect price to enter into the direction. The thing is, this strategy, price will point to the direction it wants to go to, then come back and say farewell before, bye-bye before it leaves. So look at what happened there. Price broke below this and created a lower low. And once price does that, the instruction for this strategy is pull out your box, pull out a box there and expect price to come back. And what happened? Price came back. If it is me, I will not go to any lower time frame for this. I'll just pull the trigger because I know this space is so small. I'm on a 5 minutes chart, so I won't really worry about that. I'll just pull out the trigger and look at what happened. Price went the way we want it to. Funny thing, look at how massive the sell was. Let's look at this example too. Yes, I like this example because there are certain conditions here. Look at this. This is a pullback. For me, it meets the condition of a pullback. So this is a pullback. So let me just move this aside. So, like I said, once you have a pullback, price must close above this and create a higher high. That's one of the conditions for the pullback. So we expect price to do a lower low here and come back. There is this forex consecutive candle rule. I've spoken about it severally on videos on my channel. Some people don't believe in it. I believe in it, and it has worked for me several times. Though I don't make use of it regularly. I only make use of it maybe on instances like this, that I know that the risk is just minimal. Okay, what I'm saying is this: there's a 3 consecutive candle principle, or I don't know what to call it, they use in forex at times. That is, there's going to be a candle one, the second one will break below it and close below it, covering the wick and the body. The third one will close below the second one, covering the wick and the body. That is, look at it. If this candle that broke, this one, let me expand it so you see it. This candle that broke the moving average, the next one closed below it, covering the body. The third one closed below the second one, covering both the body. That is, closed below the body and the wick. That is what I mean, and what forex people mean as 3 consecutive candle rule. And funny enough, look at it. It started from even up here. Started from here. At times they use this type of candles in place of a lower low. I hope you get what I'm saying. we expected, like the instructions I gave earlier, I said you expect to have a lower low here, then you wait for price to come back. So in place of a lower low, they use this. They use this 3 consecutive candle rule in place of a lower low, and look at what happened. Price came back here. So indirectly, they use this in place of a lower low. That means according to them, this is a lower low. Then price pulled back here, where we expected price to come back to. Price pulled back here. Not really the box, but just here inside. Once price comes back in here, go down to your lower time frame. Here we are on a 5 minutes, so simply just go down to your 1 minute time frame and seek a lower time frame entry. Or if it is like me, this place is small, I'll just take the risk and hit my pull the trigger, and look at what happened at the end of the day. Look at it. When it gets to this breaking out of that is the consecutive candle rule, breaking out over the what do we call it, the moving average, I don't risk anything when it comes to this, because even this, funny enough, this doesn't even qualify for a pullback in the first place, so I don't really do this. But when it is like this, there's a pullback already, there's the candle is trying to show me it wants to sell, and it's coming back to say bye bye, I can risk that one. Okay, I hope you get what I'm saying. This strategy is just simple. Just once you have a pullback, let price do a lower low under this moving average or above it if you are buying, or you're selling, a lower low under it, or 3 consecutive candle formation. Then let price come back in here. Once price comes back into this zone, go down to a lower time frame and take your shot. Very simple. Let me put this back there. So let's check another one. Here's another one. We have a pullback. This meets the condition for my pullback. So this is a pullback. Price broke above, but there was no higher high. So this is a wait. So here, price broke above, did a higher high. Yes, what next do? I put a box. I wait for price to come back in. Once price goes out, price is definitely coming back in. If it doesn't come back in, leave that pullback alone. Look for another one. Because at times it won't. That is forex. It doesn't happen like this. If it happens like this and you have this strategy, you'll be a billionaire in a short time. So your condition is you wait for its higher high, you let it come back below, it will go and come back below. Once it comes back below, you dive down to a 1 minute chart, you take your entry. So okay, let's try and see something here. Price came down back. Let's go to a lower, that's a 1 minute chart. Let's go and check the lower time frame entry once again. At least we have 2 examples of lower time frame entries with this strategy. So 1 minute chart. So okay, look at this. Let me remove this so at least I can explain what happened there. So once we are in the lower time frame, that's the 1 minute time frame, let's bring in our indicator, the zigzag indicator. There are other lower time frame entry strategies that I thought. So I just decided to use this. Other ones to work perfectly on this strategy. So let's just put it on. So according to the strategy, you look for the break of a high as the lower high, the lowest high. So this is a low, a lower high, a low, a lower high, a low. So this is the last lower high. This high was not broken, this one was not broken. It is this one that got broken. a break of the lowest high. That is what you're looking for. This one got broken. If I say broken, it means a higher high happened when it was, that is, there's a break above. Look at it, this red candle broke above it, then it created a higher high. But if you are doubting this, this is a higher high confirmation of a break of this. And according to our lower time frame entry strategy, once you have a break above, you mark the opposing candle. A red candle broke it, so you mark the black candle. So this is the black candle before the break. Or if you think this is not a break enough, and you put, this is still a black candle, if you still pull this, you're still right. So let's change this color. Yeah, let's do red. This is very, very easy. This is very, very simple. So this is very simple and easy. So once you put the box, once price comes here, you can even set your trade, wait for price to hit it, and so, or you can do it manually. Once price comes here, you pull your trigger and it goes. So let's go back to the 5-minute chart and see how well that one did. This is, let's remove this. This is the trade. Let's remove the zigzag indicator. Please always remove it so at least you can see the charts neatly. Zigzag indicator has this way of making things. So this is your trade, and you could have entered here on this red box, and look at what happened. The trade was successful. Look at it. Simply by following the rules, higher high above, it comes back to, that is, once you have a higher high, it will pull back to the box or that area you feel it should come back to, and once it gets there, go to your lower time frame for entry confirmations and pull the trigger there, and you have this. You don't need to do much stress. Just follow the rules. Let's look at another example. This one goes to show there's nothing in forex that is 100%. Every strategy has its own downtime. So every strategy is always scared of a ranging market. When price action is ranging. If price action doesn't range, you're good. Once you click, it will go, but a ranging market scatters everything, spoils everything for everyone. So for this example now, let's put this aside. This is a pullback, and we wait for a lower low. That's price sells, creates a lower low, and according to this strategy, you wait for price to come back in here, which price did. This is, for example, this is the box I would have hoped price will come back to. Price came back there. Price came back there, and lower time frame entries would have sent it down. That is, but look at what happened. Price went the wrong way. This is meant to hunt stop losses, and because they know once you click, once you do your lower entry confirmations, you pull the trigger, they know your stops will be somewhere, anywhere from here to here, even to this stop, and they hunted it. And funny thing, after hunting it, they came here, did a lower low, and touched the spot again. That is what they do. They push people out of the trade and come and touch the spot, the zone, confirming this zone is the actual place for that trigger to be pulled. But funny enough, price did what again? Price went haywire again, confirming this is a range. That is, price went zigzag. So once you have this kind of trade, once the thing is, it is normal at times you mark your spot, price comes there, then they hunt your stop. But once they give you once they give you a lower low and they return to your zone, if there's another failure of that move, please leave the market. please exit at, just abandon that particular pullback, abandon the pullback, look for another one. That confirms this zone is a ranging zone. What I'm saying is, once you know the strategy, this is the strategy. Now we expect price to come here, create a lower low. It did. We expect price to pull back to our zone so that we take our shot on the lower time frame, which we did here. But look at what price did. They hunted our stops. Normal, they hunt stops in forex. But they always do one thing after they hunt stops. They come back into the same spot, create a lower low, put you back in the, that is, enter back on where you feel. Okay, let's look at it like this. Let me show you something very interesting. Look at this. Do you see anything here? Do you see anything here? Okay, this is what they did. This is where our entry confirmation happened on the lower time frame. They now kicked us out until our stop. They now came back, did a lower low retest, went pulled back to this zone. Look at it, the same zone we took our shot, pulled back to this zone, confirming that that zone is where that trigger is meant to be pulled. They now acted as if we are right now, let's start making money. And look at what they did. They pushed us out, came back to that same zone again to show us this is that same zone where we were right before, and they did what? Kicked us out again. So once you have something like this, just stay away from, just ignore the market or ignore that currency pair for maybe like 30 minutes or 1 hour, then come back and start looking for your pullbacks again with that entry. So I showed you this to make you know no strategy is foolproof. It will happen. That is, you'll be successful in that strategy maybe at higher percentage, but at times they make you lose your money because they have to feed other people too. They can't just pay you alone, they have to pay other people too. That's my own funny opinion, don't mind me. So let's go to another example. So this is another example. Look at this. This meets the criteria of a pullback. And look at what price did. Once you have this, there's a pullback. Price did what? Went above the moving average, created a higher high. So once there's a higher high, what do? You create a box. Just create a box. It could be any size. Just create a box. Then wait for price to come back to under this place, under the moving average. Not necessarily your box, under the moving average. Because the thing is, you are not certain of which box they are going to use. So just wait for it. But most times, I like doing one thing. That strategy is in one of my videos. This is one of the places I think, according to my own strategy, they will come back to. I'm just marking the boxes so you know. Yeah, this is one of the places I feel they will come back to. Okay, this is, yeah, this too. And if you stretch it up, let it touch the bodies, look at what happened. So once price comes to this first box, I would have gone, in short, once price comes under this place, under the moving average, I'll just dive down to the lower time frame, seek entry confirmations for a buy. So probably, I think from what I've seen here, price actually bought here, but the steam was not good enough. It didn't have much strength to go further, so it came back again, did a lower time frame entry confirmation. That is, I've seen it here. I don't need to go down to, I've seen that entry confirmation in the lower time frame. Maybe on the 1 hour and 1 minute chart, there would have been a break above. This would have been the lowest high, or this on the lower time frame. There's a break above, a return to it, and look at what happened. Look at what happened. Look at what price did. Price So this is a very simple strategy. Just follow the rules. Let's see if we can get another example. Okay, this is another example. We have a pullback here because this meets the criteria of our pullback. And I keep saying it, conditions of our pullback, criteria of our pullback. Please watch the video concerning how to identify or spot pullbacks, the right pullbacks. Because the thing is, if the right pullback on a specific time frame is for that time frame, any other pullback that doesn't meet the condition is for a lower time frame. Let me show you something like this now. This, even if it has a higher high, if it doesn't meet the condition I'm talking about, that means it is a pullback for a lower time frame. Maybe if you go to 1 minute chart now, this will definitely be a pullback on it. And if you look at the way it moved to, it did this same strategy. It did it on the 1 minute. But on this 5 minutes chart, it didn't work out that way. This is not a pullback. So according to my own strategy, my own pullback, this is a pullback. So what we do is we wait. Price broke below, created a lower low. And like I said, you wait for price to come back anywhere above. Once price goes below, wait for price to come back above again. I hope you get it. Price goes below, wait for price to come back above again. So once price comes inside here, dive down to your lower time frame and take your lower entries, confirmations, and enter your trade. Look at this now. Funny enough, this went above the pullback, but it didn't form a higher high. So even if price goes above and in lower time frame, you are still trying to get your entry. Once price doesn't form a higher high, your entry to sell is still valid. But if price forms a higher high on the 5 minutes chart, not on the 1 minute chart, if you dive down to a 1 minute chart, this would have been a higher high already. But on the 5 minutes chart, if this happens and there's no higher high, you are still good for a sell. If it happens and there's a higher high, that means you have to either leave the pullback alone or try to map out something else. So now, if you dive down to the 1 minute chart, this will still be you looking for lower time frame entry strategies and confirmation. And it happened. That confirmation happened. That's why you have the sell. And look at it, price sold to here. Let's zoom out so you see it. So it happened here and price sold. So look at it, below the pullback, look at it, it's sold. So this is one very simple and very, very funny and very, very interesting trading strategy. You don't have to do anything. Just plot your 50 moving average, MA50. Plot it on your chart, on your 5 minutes chart. Wait for price to pull back. This is your pullback. That is why I have the trend line to mark the pullback. This is your pullback. Let price act as if it's selling. Let it close, create a lower low towards the sell direction. Don't worry, wait for it. It is coming back. When it comes back here, once it comes above the trend and the moving average, go to your lower time frame. Seek lower time frame trading setup. Once you have your confirmation, then sell. The thing is, some of you have ways you have targets, you have ways you come up with your spots, your zones where you feel price is coming back to. Let me just show you this. Here. And funny enough, all these are zones that has been taken care of. So for me, there's no specific zone I'll target. I'll just say, okay, I'll just base my entry on a lower time frame entry. And once I have the confirmation, and I'll sell. Let's see if we can get another example. or maybe I think we've done enough examples. What matters is follow the rules. Once you follow the rules, you get the desired results. I guess this is where I'll have to call it a day. Thank you for having me. It has been a pleasure. Please comment, like, and comment. Ask questions if you have questions. You have things you want to find out. Ask questions. Please subscribe to my channel and click the notification bell so you get notified once I come up with simple, too easy strategies like this. Please have a lovely day. Bye.